Hello, this is John Kicklighter, Global Head of Content for StoneX, here to discuss market conditions into next week and the top event risks that global investors will likely focus on. Now, we end out a very interesting week, one with volatility, and certainly was loaded with a lot of top event risk, but it didn't give us a very clear gauge on conviction. And this is something we've lacked for some time now, for the past few months. Even though there has been a general trend towards risk appetite, we've really struggled to seize the conviction that you would either see in momentum or breadth of the markets all rising in consistency, and certainly with the disparity of really reassuring event risk or fundamental theme that we have in the backdrop. This kind of uncertainty will leave markets unclear about which direction we continue, but also it will keep the skepticism underlying the conviction that we are looking for stability, especially around this period where September, October, November, we do have quite a bit of volatility as markets reposition, and then we get into the end of the year holiday conditions where normally we will revert back into a slower pace with some complacency, with a set it and forget it kind of mentality. Now that it never has to be that consistent, we can always deviate from those norms, but we should always take into consideration that expectation. Now, in terms of what we are following, what's interesting is this past week we touched upon quite a few events and themes, and we were left with, I think, what would be still considered a fairly robust outlook for risk trends. If you ran through the different themes that seem to be posing a risk, the uncertainty, which led to some discount and conviction as the worry built up, would offer a suggestion of a quote-unquote relief rally, although we didn't have much of a pullback that we would generate relief from in benchmarks like the S&P 500. But nevertheless, there were issues that we were reversing. So like the existence of the U.S.-China threat of an escalated trade war, which seems to have been resolved, or monetary policy uncertainty with a rate cut from the Fed, even though it's less convinced that it's going to move in December, it seems. But the general easing is still there as a setting for monetary policy. And then, of course, the Mag 7 earnings, which were uneven, but generally speaking, there was a better than expected outcome from the bulk of them. That includes Amazon with this massive rally, but also the likes of Google and Apple. Now, all of those have crossed, and again, they would be considered to be, I think, aiming towards the prevailing trend. But we need to monitor that volatility. So if we're looking for markets to watch into the coming week, to see what kind of theme, event, or conviction that we're going to seize upon, I would still stick with the benchmarks for risk trends that I like to look at, and that includes the S&P 500, the world's largest and most heavily traded through derivatives equity index for the largest economy. The S&P 500 obviously is one critical one to watch, but I'd also watch concentration, risk concentration. So you look at an ETF like the Magnificent 7 ETF, or you can look at the individual Magnificent 7 groups, or I also like to look at concentration through a comparison like a NASDAQ 100 versus a Dow Jones Industrial Average, where you really focus on that tech interest. But I would also look into other areas. The dollar, seeing it start to recover as the uncertainties, the anti-American trade perspective had been building up over the past months, it seems to be waning. And also the fear of a Fed that's going to aggressively cut rates also seems to be waning. And that dollar index is starting to slowly turn higher off of a longer-term basing period, and now is at a 3-month high. So pairs like dollar-yen or the pound-US dollar are very interesting. I'll also be watching to see if the relief of a imminent escalation in the US-China trade war will benefit Chinese markets, like the Shanghai Composite, or if you want to look at a proxy, something like the FXI. So those are broader markets to watch. Now, in terms of the themes that could actually generate some traction from the markets, it's very difficult to say what exactly is going to take the forebearer. We have uncertainties for sure, like the U.S. government shutdown, which is it's entered its 31st day, and as of the 5th, it will be a record-long U.S. government shutdown. Obviously, this is an uncertainty, and as the longer it goes, the more risk that it imposes. And seeing a pullback from that means a relief rally potentially. So that is something to watch, but it is by no means clear of its day-to-day progression. I'll also be watching the seemingly unflappable perspective of AI and how it's going to keep charging the markets higher, because that seems to have slipped a bit this past week, where we start to see previously something that I didn't see pop into the top headlines, some criticism over a possibility of a pullback in the massive investment in AI infrastructure. So now, in terms of the others, tariff delays, rate timing, economic data, which is a lot less available because of the U.S. government shutdown, all of this is going to really be unclear. And that means we need to be mindful of the headlines and see what actually seizes traction. Now, in terms of event risk that we can watch to tip the scales one way or the other, or try to gain the reins of the market, I will be watching quite a bit of event risk, and it seems to be more skewed towards economic activity, proxies for official U.S. Data points, and alternatives to the main U.S. data points like non-farm payrolls, which usually would be on for this Friday, but is not going to be with the U.S. government shutdown, and it's not clear when it will be when it is released and the government reopens. So on Monday, I will watch for China and U.S. manufacturing. Now, you also have Brazil, Mexico, Canada manufacturing, but I'm going to be watching China and the United States' manufacturing activity reports, specifically the ISM figure for the U.S. We want to see how this core of growth, both in terms of the supply side as much as the demand side of economic output, is in the collective, not in a one country versus the other country way. And certainly as we back away from trade wars, it's going to get away from that comparative theme. On Tuesday, we have the RBA rate decision. So we just came off of a run of central banks, the Fed, the Bank of Japan, the Bank of Canada, and the ECB. The RBA is not expected to change, but that always opens it up to potential of surprises. I'll also be watching Canada's trade balance, the LMI logistics indicator, and there's also a secondary indicator, the economic optimism indicator or index from RCM for the United States. Wednesday, that's when we get a record long U.S. government shutdown. That will be almost certainly in the headlines if we do continue that far, but that is not necessarily a definitive date for something substantial or tangible happening. It's just nevertheless a headline-worthy day. We'll also have the ADP payrolls, which will have to be our stand-in, and seems to be the stand-in for the Fed for non-farm payrolls. And then we also have ISM service sector activity report. That is a good proxy for the economic activity in the United States and also the bulk of the U.S. employment stats. So we will watch it for that as well. Getting into Thursday, the BOE rate decision, although no expected change, nevertheless, keep tabs on it. And we'll also have a Mexican central bank rate decision. Again, no change expected there, but it should be watched in the context of the broader trend. And then through Friday, we get some Chinese and Japanese FX reserves. This is showing capital flows and holdings of assets like U.S. Treasuries, which is absolutely something to watch in the broader context of that anti-dollar trade. We want to see if it's actually taking place. We will also have Chinese trade balance, also a very big indicator, obviously, for the economic considerations. We will have Canadian employment, which will be a stand-in for the U.S. in the North America session. And I will also be watching very closely the health and confidence of the U.S. consumer through the University of Michigan Consumer Confidence Report. That wraps up the week ahead. Don't forget to like and subscribe for more financial market insights.